Let's file into tax season and the mistakes you might be making on your returns this year. Here to help get the most out of that refund is David Perez. He's the CEO of Maverick. David, thank you for joining me. Now, listen, you have nearly 2 decades in the tax industry. Most payers, they get a little happy when they get a big refund check from the IRS, but you're saying that that's actually a pretty bad strategy. Can you break it down for us?
Well, anybody who's getting a refund in most cases is just giving the government an interest-free loan, and getting a loan or giving the loan to the government is probably not the best interest for you or for me. So today, getting a refund typically requires that you overpaid in taxes throughout the year, and that's really a bad thing in my opinion because you shouldn't have to do that. You should calculate your tax liability throughout the year and pay just enough to meet the requirements, so you don't have to lend money to anyone.
So wait, how exactly do you do that? You know, a lot of people just get their W-2s and they plug it into whatever form or CPA that's helping them out. So how do you actually do that?
So you can actually change your federal withholdings on your W-4 when you go to your HR department. Most people have HR. They just go and edit it to match either the family size or the marital status. Once you adjust those two things, you'll know if you're going to overpay or underpay. And typically, if you can't calculate it, you could just check when you file your return at the end of the year. If you overpaid, then you can make that adjustment. You just lower the withholdings.
Okay. Now, for anyone getting thousands of dollars back on their refund, where should they put that money when they actually get the funds into their account?
Well, that's a good question because many people like to think about it as a bonus or some sort of extra money that they can use. But the truth is, you probably need to use that the right way would be to pay off debt, to start a safety or security net of fund, an emergency fund, then invest in tax favored investments like retirement accounts, and then possibly if that passes, you still have money, then you would want to go into assets that could build wealth for you and your family. It's not extra money. It should be considered earned money. You earned 100% of that money. Now leverage it so that you don't have to be in a better, or so that you can become in a better financial situation.
Now, as that April 15th filing deadline looms, what do you say to folks who might file an extension this year?
Well, an extension is the extension of time to file, not time to pay. That's a big difference. Most people don't get that. It's like, well, I want to pay later. Well, you don't want to pay later because you are going to make a filing extension. You should make an estimated payment if you owe taxes, and ensure that that estimated payment is very close to what you're going to owe. You can pretty much guess it if you have most of your documents, which if you were to pull a transcript from the irs.gov website, you can check all your income, verify you have all the forms, and then estimate your payment, make that payment so that you don't get penalized for not making an estimated payment with your return.